let's talk about how to become a corporation. So why would we want to become a corporation rather than a proprietorship? Well, one of the main reasons is that corporations can issue stock. And what that means is investors give us money in exchange for us giving them ownership in our company. So that is issuing stock and having investors. Another reason is that it offers us limited liability. Another reason is that it offers us limited liability, meaning that if somebody sues our company, they cannot come after our personal assets. So we have limited liability. Now, why wouldn't everybody want to become a corporation? Well, because it has more paperwork and more rules to follow. It has to have meetings, board of directors, and all of those types of things. Another reason that you may not want to be a corporation is corporations are double taxed. So dividends are double taxed, meaning that they are taxed at the corporate level as income, and then they're taxed again at the shareholder level. So those are some of the drawbacks of being a corporation. So let's say we decide to be a corporation. What do we need to do? Well, the first step is we need to have articles of incorporation. Okay, so this is an example of the articles of incorporation, and this is for Apple. So this is going to tell us the name of the corporation and how many shares Apple has authorized, or how much they're authorized to issue. So it says that the common stock, Apple is authorized to issue 1,800,000,000. Okay, and then we have another class of stock called preferred stock, and this corporation is authorized to issue 5 million shares of it. So in this chapter, we will be talking about common stock as well as preferred stock. So to become a corporation in Mississippi, you would go to this website and go to the Secretary of State and complete this form for the Articles of Incorporation. So let's look at this form. It asks you if you're a profit or non-profit, which you would be a profit, and the name of your corporation, and it asks you the different classes of stock you're authorized to issue, as well as the number of shares, and it asks some more information, and then you have to pay a $50 fee, and then you will be incorporated and will become a corporation. So let's talk about stock. The main transaction in this chapter that you will be accounting for will be stock transactions. So when we issue stock, we are giving away ownership to our investors. In return, we are receiving money from these investors. Okay, so when we look at the stock price, we are looking at the market price. So once the company issues the stock, that is the last time they are going to directly make a journal entry for the stock. So in other words, when Apple issues the stock, they're going to have cash go up and common stock go up. Then from there, whoever owns that stock can trade that stock freely in the open market. So it is easy to transfer ownership of stock because you can sell stock anytime you want. Apple does not have any say-so in who buys it after they initially sell it to you. So when I'm looking at this stock here, currently Apple is selling it at $260 per share. It is up 71 cents, and of course it goes up and down all the time. Now a lot of times what you can see is what we call a stock split, and what happens is maybe the stock price got too high, and what happens is somebody may not want to put that much money into one share of stock. Let's say that stock was $700 a share. So what Apple can decide to do, or any company, is split the stock. So what happens in a stock split is it halves the market price and it doubles the number of shares. So technically your investors still have the same amount. It just doubles your number of shares and halves the price. So that is what a stock split is. Okay, so I've changed the screen here to show you another thing that you can see here are dividends. So see the D, that means that dividends. So when we buy shares of stock, we're buying it for a couple of reasons. One of the reasons is we're hoping that the stock price goes up and maybe later sell it at a gain. Another reason is at the end of each quarter, they may provide us a dividend. So they may decide to declare a dividend, which means they are going to distribute some of their earnings to us as shareholders. Okay, and so you can look at the dividends. For example, it looks like here their dividend was 77 cents per share. So for every share of stock you have, you would receive 77 cents a quarter. Now, dividends are something a corporation can decide or not decide to do. They're not required to pay dividends. So you can click on each dividend and see how much each dividend per share was. You can even go back further back and see how much the dividends were. So in 2016, they were 57 cents a share. And then, let's see, 5 days ago, now they are 77 cents per share. Now, early on, there were some periods where Apple did not issue dividends. They held on to their money and they invested it back into the company and into research and development. So a lot of times companies, they won't issue or pay out dividends. Then after they accumulated a lot of capital, they started paying out dividends to their investors. So in this chapter, we're going to learn about corporations and issuing stock and the journal entries to issue stock, as well as paying dividends and buying back our stock, and also having stock splits. Please let me know if you have any questions.